All right, guys, welcome back. I hope everyone's been having a great weekend. And this is going to be a short video. There wasn't really that much excitement last week. Look, on Friday, the S&P 500, the NASDAQ pretty much ended in green, slightly in green, except for the Russell, the 2000, that was slightly in red. But overall, the stock market was up in green. But no real fireworks apart from the crypto side of things, and I'll speak to that in a bit. However, everyone's been talking about inflation. Now, a key indicator came out. This is the CPI inflation. But another key indicator that came out is the PCE, which is the personal consumption expenditures. So that report came out. That was hotter than expected. Of course, that seems to be the Fed's be-all catchphrase, and that was sitting at 3%. And they reckon that's the true reflection of the US inflation rate right now. However, you got the CPI inflation, which was saying at about 4%, and then you got this PCE, the personal consumption expenditures, sitting at about 3%. But I wanted to show this graph because this is a really cool graph from Econometrics. As you can see, the US is currently sitting over here in terms of its inflation, and the whole point of showing this graph was to compare it to the 1970s in the US, how quickly from down here it just shot up well over 5%. This looks like about 6-7%, and then going back down and then shooting back up again. So the whole point of this graph was to show that inflation can quickly get away from you, and it could actually shoot up. And I'm actually expecting that, what's happening with the US. So I wouldn't be surprised by the back end of this year, even going into 2022, that the US inflation rate will be sitting at about 6%, between 6 and 5%. That's kind of what I'm expecting. So that's going to play out how you're going to position yourselves in terms of your investment portfolio. But from my personal opinion, I am definitely getting in terms of gold. Even though I live in another country, whatever the US does, it's going to be affecting the gold markets anyway. So hence why I'm paying attention. So from my side, I'm definitely getting into gold, and gold's doing really well, but I'm going to speak to that in a bit. However, there was a nice little article that came from Kitco. I just want to read that quick. Right, so I just want to draw your attention to this particular paragraph. Consumers' assessments of present-day conditions improved, suggesting economic growth remains robust in Q2. However, consumers' short-term optimism retreated, prompted by expectations of decelerating growth and softening labor market conditions in the months ahead. Consumers were also less upbeat this month about their income prospects, a reflection perhaps of rising inflation expectations. And it also further says, overall, consumers remain optimistic and confidence should remain resilient in the short term as vaccination rates climb, COVID-19 cases decline further, and the economy fully reopens. All right, so this is the week ahead, and we're seeing Monday as a public holiday in the US. Earnings, kind of big growth. Again, we got the Fed vice chairman. They're going to be coming out. Construction spending. This is going to be very key. I'm going to speak to all of this in a few minutes and try and wrap up what I've just gone over. We've got advanced auto parts. Nothing really too special happening on Wednesday, apart from the Philadelphia Fed speaking. A lot of Feds are speaking, actually. Atlanta Fed president speaking now. That's happening on Wednesday. Thursday earnings. Broadcom. Not really exciting stuff. If we go down, again, another Fed, Atlanta Fed, Dallas Fed, Philadelphia Fed, and Fed Vice Chairman. They're all coming out with their speeches. Friday, we got the Fed Chairman Jerome Powell. So Friday is the big day with Jerome Powell coming out, talking about central banks and climate change. So this is going to have a very interesting effect on energy markets, oil, uranium, you name it, the greenhouse projects, whatever, man. It's really all eyes are really going to be centered on that. The biggest thing to also watch out for is going to be the employment. Okay, so there's two indicators I need you to pay attention to. Is the employment that's coming out on Friday, and if we go back up here, it was the construction spending. Okay, so there is current optimism right now. Inflation's high, but there's current optimism in the US market because lockdown is pretty much ended, and families are getting together. Let me actually show that. Okay, so this is all families coming together. They're calling this the Great American Reunion. Okay, so this is the optimism. People are coming out of their houses about a year and a half now. Families are starting to get back together. And this is the optimism, okay? A brighter future, new, and, people want to get out there now, okay? But there is still trepidation. So short term, very optimistic. Long term, trepidation, because they don't know if there are going to be jobs out there. And if they are, what is the salary going to be like? Now, I'm going to give my opinion of what is going to be happening now in the US. And pretty much it's going to be this. So your wages are going to go down, okay? Because you've got to remember, businesses are now tackling a new environment, a new selling environment. So you got your business selling to businesses, and they're going to enter into price wars. That, unfortunately, is what is going to happen. That means the income, the profits that are going to be coming from the sales of particular products and services within these businesses, they're going to have to compete on a price war. So they're not going to be pulling as much profits as they would have done pre-COVID-19. What that also means is that any job opportunities that are out there, the wages will be lowered. So I want to get back to that image. Hence why I said earlier that this could easily get away, because you're going to have this compounded effect where people are earning less, and food prices are still going up, as well as your energy prices are still going up. So this could easily get away, and it's going to speak to that. And I actually believe that is what is going to happen, simply because of what I've seen around the world in terms of how businesses are tackling themselves in the new environment. And unfortunately, they're going to be going into price wars with each other just to get businesses. And the new jobs that are going to come out, I highly doubt you're going to get higher wages. You're actually going to get lower wages going into this new environment. So this is what I'm speaking into, and this is why you've got to pay attention here, because this is also going to tell you construction spending. Is the economy really being restarted? Is there projects out there for that? Because a lot of projects were put on ice prior to COVID-19. Now, is there funding for those projects again? I don't know. So that's something to pay attention to. And then again, the employment. It's really going to speak to where the economy is right now. And that could shatter the optimism that people are facing right now. So I'm very nervous for the markets this week, just based on those two. But this is why you're seeing so many of the Feds coming out now. And I have no doubt to try and taper those type of reactions, what's coming up, because this is a big week. This is an extremely big week. I just want to talk to the markets very quickly. So US 10-year Treasury Hill slightly down, but overall from March, again, just it's steady. It's been fairly steady. It's been managed quite well. If we go to the US dollar slightly up, but hence you're going to see that oil is slightly down. And I'll speak to that. I'll show you in a couple of minutes. So that is what's happening. Just a little bit strengthening of the dollar, but it's going to go down. Okay, so if we can see a crude oil slightly down. If we have a look at the markets, like I said, Dow Jones is up, Nasdaq's up, S&P 500 is up, Russell slightly down. It's all slightly down. But overall, markets are pretty much doing well. And they're going to go up. They're still going to go up. And I'll show in a couple of minutes. Right, this is gold. This is your downtrend. Sort of like a microphone pattern that's been playing out here, but it's broken out. So gold has been such a great little player, and it just looks like it's going to go on this run, simply because you've got inflation now, and gold is a fantastic hedge historically against inflation. And I want to look at oil quick. Now, oil is extremely bullish. Now, I've been very bullish about oil consistently in all my videos here. And it looks like it wants to do a massive breakout. And this is a ascending triangle, which is typically a very bullish indicator. So it could, get rejected here, bounce back up, and then shoot back up. But this is looking for a very bullish breakout itself. So Oil and gold, commodities. Yeah, commodities is the game, so go check that out. I want to quickly jump into the crypto environment. Cardano successfully launches crucial testnet as smart contract integration approaches. Okay, so they're looking at about the next 3 months, like 90 days, for this complete testnet to be completed and then rolling it out to the public. If we have a look at Bitcoin, so pretty much JP Morgan boss Jamie Dimon personally advises people to stay away from cryptocurrency. This is a very bullish indicator. When JP Morgan comes out with statements like that, that's an extremely bullish indicator, in my opinion. Don't listen to this guy. In fact, do the very opposite. Well, I am doing the very opposite of this guy. I'm going to be doing the very opposite of a lot of people, and I'll show you that now. So if we go here, I got BitBoy Crypto, right? Worst Bitcoin crash this weekend. Why I sold 2 million in altcoins. Bloody crash ahead. Okay, if we go down. Why I'm selling Bitcoin, bullish indicator. Why I sold all of my Bitcoins, it's over, bullish indicator. Bitcoin failed, there's no coming back from this. I love it. This is all bullish indicators. I want to show you more bullish indicators. Okay, so this is actually from the sentiment feed. So yeah, they're on Twitter. Go check them out. I do follow them, and I love the stuff that they push out. I highly recommend go check them out. But it says here, Bitcoin's millionaire wallet still maintaining high range, maintaining accumulation during dip. Okay, so pretty much wallets, about 100 to 1,000 have been accumulating about 34,000 US dollars of BTC during this week. Okay, people are buying the dip now. All right, if I can also, so this is a very bullish indicator. If I can just go here, the fear and greed index for Bitcoin is in extreme fear. This is another bullish indicator. Everything's screaming buy, 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 buy. Okay, in my opinion, because I am going to be doing the opposite of what everybody else is doing. And the reason for that is that there is a golden rule in trading, well, in economics, or investing. If you have a look here, buy the fear, sell the greed. And that's exactly what I am doing. I am buying the extreme fear. Hey, so pay attention to the construction spending report that is coming out next week, as well as the employment report that is coming out next week. But overall, the economy is going to keep going up. The stock market is going to keep going up. And oil is looking fantastic. Oil is looking so juicy right now. It is looking for a massive bullish breakout. All right, so that's what I'm playing at. All right, guys. So, yeah, peace out.